Horizon Investments, Greg Valliere is here. Greg, you think perhaps these minutes can bring a little bit more certainty to the market, because all of a sudden there's a big question mark, not just over the Fed, but who Jay Powell is. Is he a dove? Is he not? Is he a hawk? What do you think?
He's a little more hawkish, Charles, I think, than Janet Yellen, but I think he knows he's got to go slow. There will be a hike, in my opinion, in March. That's virtually certain. Beyond that, it's a cliche, but it all depends on the data. We'll see what the data looks like during the summer and fall. Probably a couple more moves after that, but he strikes me as someone who's not going to overdo it.
Yeah, I mean, if we have to just sort of model this thing out for the whole year, we would assume a certain amount of growth. We already know that Wall Street in general thinks that revenues are going to be significant, earnings are going to be another strong year for that. Are three rate hikes so awful that it would derail the stock market rally?
I don't think so, for one really important reason, and that is, if the rate hikes are because the economy is getting stronger, that's a good thing. If rate hikes are because inflation is starting to erupt, that's a bad thing. And frankly, I don't see any sign yet of any significant move by inflation. Maybe expectations will creep up during the year, but I think all this inflation stuff is overdone. It's still pretty tranquil.
How does that happen? You've been around. You're one of the smartest guys out there that I know when it comes to the markets, and all of a sudden you see, we get the jobs report. The item that stands out is 2.9% year-over-year wage growth, and you say to yourself, golly, pull up a 5-year chart or a 10-year chart. That's one of the slowest annual increases in a long time. Regular people watching this wonder what the heck Wall Street's are worried about.
Well, that's right. And, there's nothing wrong with wages going up a little. I think it puts more money in people's pockets along with the tax cut, so you're going to get more real disposable income. That's a good thing. But when it comes to the inflationary stuff that the Fed would worry about, I just don't see it. Maybe by the end of the year we'll start to worry about it. But I think because inflation is still moderate, the Fed's rate hikes will be moderate.
Next one for you, Greg. There's a new tally. Someone's added this up. Boy, hope they had a big calculator, because it shows now that these banks have been fined a staggering $243 billion since the financial crisis erupted. What are your thoughts on that?
Well, a couple of things. Number one, I'd like to find out where all that money is going to go. I guess some will go to states and the federal government, but what's that money going to be used for? Secondly, you could make a case that despite all of these enormous fines, bad behavior does persist. And Wells Fargo is sort of the poster child for bad behavior, but right across the board, I think that the regulations have not curbed these banks from doing things that warrant getting fined.
And I want to piggyback on the point you brought up. They take this money from banks in the name of customers. Customers haven't seen a dime of this.
Exactly.
You've come to the rescue. What happened?
Yeah. It's funny. My wife and I are talking about that this morning. I don't see any. I'm a customer of a couple of the banks that have been mentioned. She is too. We haven't gotten a dime of it. You're absolutely right.
Oh boy. Hey, Greg, you're one of the best. We appreciate you taking the time this morning.
All right, you bet.